morning, everybody, and thank you all for attending today's webinar and panel. The topic today is copper, the metal that will power our greener future. And I'm very, very excited to be with you, speaking with you all today, as well as being with all of our panelists. My name is Adam Rosenzweig, and I'm the managing partner, along with my partner Lee Gehring, of the investment firm Gehring and Rosenzweig. We are an investment firm based in New York that focuses exclusively on natural resource investments across the equity spectrum. We've been longtime bulls of copper and the various base metals, but particularly copper, owing to several factors, which we'll, I'm sure, talk about all today with our panelists, but particularly the role that copper will play in the emerging energy transition theme. We have an illustrious panel today consisting of Pat Donnelly, VP of Corporate Communications and Development with Trilogy. Trilogy has a 50% joint venture in the Ambler project with South 32, and we'll hear all about that today. Also on our panel, we have Jamie Levy, co-founder, president, and CEO of Generation Mining. Generation Mining has the Marathon Palladium Copper project in Ontario, and previously Jamie was involved with Pine Point, which sold to Osisko Mining. Lastly, we're very, very lucky to have with us John Black, CEO and director of Aldebaran Resources, which is a Argentinian-focused copper porphyry development story, and very, very exciting. For purposes of full disclosure, I would like to point out to the listeners and viewers today that our firm, Gehring and Rosenzweig, does maintain a position in Trilogy Metals. So thank you all to the panelists for joining us today. The format of today's webinar and event: first, we'll hear from each of our three panelists briefly and get a little bit of an overview of their respective companies and projects. Following that, we'll break into a panel discussion. And after that, we'll be able to actually answer some questions and answers from the audience as they come in through the question and answer module that you'll see attached to your webinar. So without further ado, I'd like to please pass the presentation over to Pat Donnelly, VP Corporate Communications and Development with Trilogy, to hear about the Trilogy story. Go ahead, Pat.
Great. Thank you so much, Adam, and welcome everybody to our webinar, and hopefully we'll provide some insightful color on the space. And I'll do a quick go over of Trilogy Metals. We're up in Alaska in the Ambler Mining District, and we're in the good part of Alaska. And we're about 200 kilometers from, or 200 miles from the Red Dog mine, which is the world's largest zinc mine. And what's unique about Trilogy is, as Adam mentioned, we have a 50% interest in the Upper Kobuk mineral projects. And it's an extensive land package. It hosts volcanogenic massive sulfide deposits. So, these deposits tend to be high grade. They tend to occur in clusters. We have a joint venture with South 32 Limited, which is an Australian company, $13 billion market cap. And we have tremendous support from Native groups, the government, and again, our partnership with South 32. The two assets within the UKMP we're focusing on are Arctic and Bornite, both very, very high grade. We have a feasibility study on Arctic, very, very compelling economics. Again, here are partnerships: South 32, NANA, and Alaska. If you want to do business up there, you can do business. You just got to have the right partnerships and focus on that. So South 32, 13 billion market cap. NANA is a large Native corporation. They own the Red Dog mine. Teck Resources is the operator. And so the culture of NANA is fully ingrained in the mining industry. And they're very, very sophisticated and a great partners to deal with. Alaska, there's a group called ADA, which is an infrastructure bank owned by the state. And they permitted a 211-mile road to our project. And now they're moving ahead with the engineering of this road. Very good shareholders: Electron Group, Paulson, Baupost in New York. We have about $7 million in cash, and our market cap's around $283 million. These are all US dollars. Here's a snapshot of the Ambler Mining District. From one end to the other, it's about 100 kilometers long. As I mentioned before, it's a VMS district. Numerous high-grade deposits, showings, and drill holes. We spent $27 million last summer, and we expect to continue drilling again next summer. And hopefully soon we'll start having some drilling results from our past summer program. Here's just the economics at Arctic. Again, at $3 copper, you have a net present value after tax of $1.1 billion. And so again, very low cash costs and very good cash flow, excellent internal rate of return, and a very short payback period. So I'll leave it at that, and I'll pass it back to Adam. Thank you very much.
Thank you, Pat. Really appreciate that. I would now like to turn it over to Jamie Levy, and we can hear about the Marathon Palladium Copper Project.
Thanks, Adam, and thank you for SIX for organizing this event. Much appreciated. Quick intro here, just quick high level of the resources we have. We have just over 4 million ounces of palladium, 1.1 billion pounds of copper, hence the reason why we're invited to this presentation, and 1.4 million ounces of platinum in resource. Just some of the people who we are. One of our most recent hires is John Paul Deco. He was recently over at Glencore. He's going to help us out with our concentrate marketing. Drew Anwell, our Chief Operating Officer, was just over at Detour from development to construction. So happy to have him. And we should be talking about some of the new people that are going to help build the mine for us. Most recent hire was Jeremy Dart. He was over at Hemlo, going to help us through the permitting and through the EA and the environmental assessment and some of the provincial permits. And as you can see, some of these other names, Paul Murphy helped us out, feasibility study over at G Mining, and Gordon Leggan, Pierre Laguerre over at LQ. Steve Haggerty is helping us out with our past metallurgical work, ex-VP operational support over at Barrick. So we're staffed up and ready to develop and build this project. Some of our independent directors, the note is Cashel Meager, Chief Operating Officer at Hudbay, and Jen Wagner. She's a little busy these days with Agnico and Kirkland, but she's a great person to have as an independent board. Where we are, very good infrastructure here. We got the Trans-Canada Highway going through the project. We got a little airport. We got 2 power lines intersecting the project. We have a town of Marathon that's supportive of this project. We have a First Nation group just south of us that we have financial participation with. A road to the project. It's very good infrastructure for being in Northern Ontario. So Hemlo is about 30 kilometers to the west of us. So one of the reasons why our little capex is because of this great infrastructure that's been set up. Just quick high-level economics is your mine life, producing just around 245,000 ounces of palladium equivalent a year. Upfront capital or capex is $665 million. All-in sustaining capital or cash cost is just over $809 per ounce of palladium equivalent. We had 2 scenarios. The base case IRR was 30% after tax, $1 billion NPV. That's using consensus pricing, pricing which was, I believe, sometime in February, which was palladium at $2,400 and copper at just under $4. We had an IRR of 47% and an NPV over $2 billion. So probably today prices with copper at $450 and palladium wherever it is today probably be a similar IRR. As you can see, a short payback at 2.3 years on the base case scenario. Just good on the breakdown of the metals. It's about a 60-30 split with palladium copper at today's prices right now. Just what, I like to talk about the upside to copper here. This is a copper panel, and I think we're all quite bullish on copper here. But just keeping copper, palladium at 17 and a quarter, which again was our base case pricing, and copper at 450. Copper's not quite a byproduct; it's more of a co-product. At this level here, we've got an IRR just under 35%, and our NPV just under $1.4 billion. So it's about a 30% move in our NPV with copper prices up at 450. I'm not going to get too much into the palladium market here, but what's very important about our project is we are right on the grid power, which is carbon free from Southern Ontario. So we're 96% carbon free. It's probably closer to about 100%, but sometimes in the summertime they got to flick on the natural gas switch when too many people are cooling down their houses. So we're quite happy about this relative to our comps in the palladium. I can't do the copper; it would be about 10 different slides here, but just on the palladium, we're very good relative to the rest of the group here. Just quick timeline here. If I have a couple of minutes here, we're going through the EA process. Well, hopefully we'll get that by the second or third quarter of 2022. Within their time, we're applying for provincial permits. They can't grant them until we get our EIS. So we're hoping for all that in the second or third quarter of 2022. Then we could start breaking ground late 2022. It's about an 18-month construction. We're hoping for production sometime the second or third quarter of 2024. That's it for me. Thank you.
Wonderful, Jamie. Thank you so much. Very, very interesting. And thank you, everyone. We're keeping pace and time exactly to the minute here. So that's just wonderful. Thank you. Finally, I'd like to turn the panel webinar over to John Black, CEO of Aldebaran Resources, to hear about the Altar Copper Gold project in Argentina. And today, John is calling in from South America, and so please excuse if there's a delay of a moment or two. John, turn it over to you.
Okay, great. Thank you very much, and thank you everyone for tuning in here. What I'd like to talk about today is the Altar Copper Gold project held by the Aldebaran company. This is actually the third company that our same management team has had, and we specialize in projects that are large copper gold deposits, identifying those projects, capturing them, drilling them out, and de-risking them, and then ideally monetizing them by selling them to a major mining company. The appropriate forward-looking statements, of course, apply, but let's, in the short time we have, just jump right into the project. So the Altar Copper Gold project is located in the southwest corner of the province of San Juan in Argentina. It's a province that has an unusually large number of undeveloped porphyry copper deposits. Many of these deposits would be mines if they were located on the Chilean side of the border next door. We can see the Jose Maria and Filo del Sol projects in the north part of the province. Those are held by Lundin companies. We see Barrick's operating large gold mine in the central part of the province. And the McEwen Copper has Los Azules just to the north of us, and El Pachon is held just to the south of us. So we're in a stretch of the Andes that's extremely well endowed, but underdeveloped primarily because Argentina has not been a mining company. But that's changing as Argentina is embracing mining at the moment, and we're seeing a lot of interest coming into the country as we move forward. And San Juan in particular is a hot spot in the country as we're looking for projects. Just a little bit about this project. This is a project that has a past history. It was actually discovered by Rio Tinto, largely drilled out by Peregrine Mining, a junior company held by Eric Friedland, and sold to Stillwater Mining Company in 2011 for $487 million US. Stillwater subsequently put in about $45 million worth of exploration into the project, but it stalled. It was a large copper project that didn't really fit within a primarily PGM mining company. And when Stillwater was purchased by Sibanye, an opportunity opened up for us to acquire the project, and we reached an agreement with Sibanye Stillwater to acquire the project for a total of $15 million in cash payments, which have been completed. Sibanye Stillwater continues as a 19.9% equity partner, very active and very bullish on the project. And we can earn into an 80% project interest in the project by expending $30 million over 5 years, with an additional $25 million over additional 3 years. We've spent about $17 million of the initial earn-in, so we're well on our way into earning our 60% interest in the project. And what we'd like to do is just take a quick look at the project in the short time we have here to see why we're so excited about this. And this project commanded its high price earlier and then kind of disappeared off the map. So we're looking at a cross-section looking to the north, across which it's actually a district of porphyries. Like many porphyry systems, this is a cluster of porphyry deposits. And the known resource occurs in the Altar Central and the Altar East deposits, where we see the conceptual pit that constrains that resource on the diagram we're looking at. Within that pit, there are nearly 1.2 billion tons of 0.5 copper equivalent in the measured and indicated resources, fairly extensively drilled out by the previous operators, with an additional almost 200 million tons at a similar grade. So a very large deposit already, kind of an average grade for this deposit. But what we're really excited about is there are portions of the deposit that have significantly higher grade that we can see by the hotter colors within this. And then we're particularly excited about a new zone to the west that had never really been drill tested by the previous operators called QDM Radio. There's a small gold resource at QDM, but the radio zone will be the priority target for us to be drilling this next year. We've encountered long runs of substantially higher grade in the limited drilling that we have there. There's currently no resource in the radio deposit whatsoever at all right now. So we're very excited to be drilling that. Our first drill rig is already on site. Keep in mind, this is a South America project, so it's an opposite field season on here. Second rig will be starting in the next couple of days, and we'll be up to 4 rigs by early December, and drilling this with our first aggressive drill program to drill out these new areas in the project. If we look just a little bit at share structure, this is an important aspect of the company. We have one large shareholder in Route 1. They own nearly 50% of the company. They've been a strong backer for us in our predecessor companies. Aldebaran is the third company of 3 that our same management team has operated. Our first company was called Regulus Resources. It was sold for about $650 million for the Hikira discovery in Peru. Our second company is currently drilling on a very exciting copper gold project called Antiquary within the Regulus company, and then Aldebaran is on this project. So it's what our team specializes in moving forward, and Route 1 has been a very substantial backer for us. And of course, Sibanye-Stillwater has about 20% of the company. So you can see that we're currently a market cap of about $70 million. It's a project that's largely been off the map, but this will be the first very aggressive program this season. And I think it's one to very much keep your eyes on as we move forward and start to deliver results on this project. It's one that's kind of disappeared off the map a little bit from previous operators. So thank you very much.
Excellent. Thank you. Thank you for that, John. And thank you, Pat and Jamie, as well, for those really interesting presentations. For the benefit of the listeners and viewers today, the idea of high quality, relatively high grade and large new copper development stories, and PGM stories for that matter too, are really few and far between these days. And so I can't, I should really stress that we're being spoiled listening to 3 good stories here today, but there's really not a lot in the copper industry and the base metals industry today, given ongoing depletion and just basic difficulties related to geological constraints. So very, very interesting presentations and projects, gentlemen, all of you. Thank you. I'd also like to just call out again, there is a Q&A panel on the right-hand side. At least on my screen, it's on the right-hand side of the interface. And please feel free to ask questions. We'll go through those questions here in a moment when we finish up with the panel discussion that'll start right now. So thank you, gentlemen, and moving right along. First of all, I wanted to take a step back and just ask a question to the 3 of you, and it's a bit of a general question, and apologize if it's sort of Copper 101. But given the title of this panel, for one, copper and the metal that will power a greener future, and given all of the recent events coming out of Glasgow and the recent discussions about the role of renewables, the role of EVs, and the general theme of energy transition, I was hoping if you didn't mind taking a step back and saying to any of the uninitiated out there, why exactly is copper this green metal? What do people talk about when they talk about copper as being part of the energy transition? And I thought maybe we could start with Jamie.
Question. So I would start by saying that the transition to the electric vehicles is obviously very copper needed, if that's the right word. I mean, I think the number that I heard is about 180 pounds of copper is needed for an electric vehicle. Again, solar panels is certainly needed. Copper is needed for all the wiring of the charging stations. Copper is needed. So I mean, as you mentioned earlier, there is a little bit of constraints on the metals right now. I think China, I just heard that it's been the tightest market in a while for copper concentrate. So again, the need for copper is there. And I guess I could hand it off to the next, but it's certainly needed for any sort of power switch out of fossil carbon.
And John, Patrick, anything you care to add, just to bring people up to speed in terms of this energy transition and the role that copper is going to play going forward?
Yeah, I'll jump in. I was reading a story in The Economist a couple of weeks ago, and it was about connecting areas globally that have a surplus of green energy to areas that require it, and specifically these subsea cables. And For example, there's a 720 kilometer long cable linking Norway to Britain, because Norway has abundant hydroelectric power. And now there's other projects that are being mooted. For example, the subsea cable from the north coast of Africa to Europe to supply power, and also perhaps one from Australia to Indonesia. Obviously, Australia gets a lot of sun. North Africa gets lots of sun. I saw a project, in the news where Quebec was trying to supply the United States with power, and the people of Maine had a plebiscite and stopped it. So maybe because they didn't want to put these big giant grids going through a forest. So a way to deal with that is put a cable down the East Coast and connect Quebec with the United States. And these subsea cables require a lot of copper. So yeah, we need electricity for cars and all kinds of things. But how are we going to get that electricity? How are we going to move it around? And so these subsea cables, they're massive, hundreds of kilometers long. That's a lot of copper. And then also with that is the associated infrastructure to move this power along so we can have the electric vehicles.
Excellent. John, anything to add?
Well, I might add to this too is that it's not just using more copper on this. We need to be moving away from a carbon-based economy on this, and so that's going to be the real big push. And a lot of what's coming out of COP26 on this right now is an accelerated move away from fossil fuels and move to more solar or wind generated power. The other point I'd like to add too is that we're just not very good at finding new copper deposits. And you'll notice that, particularly in the projects that we specialize in, there are often projects that have been known for quite some time. Basing a lot of our exploration work off of the backs of good work done over decades by previous companies. We will run out of those. These are getting harder for us to find, and it's very hard to find new projects. And it's a much longer time period to put projects in right now. So just as copper demand really goes up, we're also not very good at delivering new copper projects. And that's the pinch point we're seeing and why we're seeing high metal prices. And I anticipate they'll increase even more now.
No, that's fascinating, John. Thank you so much for that. I mean, if you look at really on both sides, new discoveries of large scale mining projects in general, but particularly copper over the last 10 years, it's really been quite abysmal, looking at the amount of new discoveries. And obviously, discoveries go on to become reserves and then ultimately a production. And so if you're starving the front end of that funnel, there's going to be an impact sooner or later. And we're starting to see that already. And then at the same time, all the existing mining operations in the world are beginning to suffer fairly substantial depletion problems, and head grades are just moving relentlessly lower. So it definitely seems like on the supply side, things remain extremely tight. And one thing, I just want to add that you guys all touched upon, but this move into a renewable, or more of a push to a renewable power base, moving away from gas and coal and into things like wind and solar, leaving the carbon aside, it's a lot less centralized. So you don't just have one giant turbine spinning and generating electricity. Instead, you have thousands of windmills and solar panels, and all of that gathering system and all of that switching system is all incredibly copper intensive. So, you're seeing now in countries that have adopted these big renewable mandates, the copper demand has just been growing quite dramatically. And I think that's a trend that'll probably persist. So thank you all for that. This next question is a little bit more for Patrick, but please, feel free afterwards, everybody, to jump in. In the United States, and I'm calling in from New York today, although I'm Canadian originally, as I have my poppy on here, but live in New York. There's been a huge amount of news about the recent hard-fought but finally moving forward infrastructure bill, $1 trillion infrastructure bill here domestically, and with that, there's a increased focus, I think, on domestic sources of materials to help meet some of these demands as well. How important do you think it'll be going forward to have a new U.S. source of supply?
Well, I think as the panel is well aware, copper is also a strategic metal. And, as John pointed out, and Jamie is, it's getting harder to find mines. They're scattered all over the world, and there's going to be competition amongst different states such as China and India and Russia and other countries for copper, and it's going to become more acute going forward. So the Chinese have been very, very good about thinking way ahead of time, investing in projects, and making sure they have a steady supply of copper. And so, yes, the Biden administration's passed this big infrastructure bill. That's great. But now, where are you going to get this copper? And you're competing against other countries for this copper. And so, right now, a year ago, the United States put out a list of critical metals. Copper is not on it yet, and I'm sure at some point it will. So, if the United States government is serious about combating climate change, they need to get copper, and they need to get it locally, and that's something that resonates well in the United States. And on top of that, we're in a state that has always focused on their economy on hydrocarbons, and that's changing as well. And the government is very acutely aware of that, and they want to diversify their economy away from hydrocarbons into cleaner forms of energy. And they know that copper is a part of that, and that's why we have tremendous support from the Alaskan government for our projects.
That is very interesting. If you look at the scale and scope of some of these big, broad plans here, particularly coming out of the recent discussions in Glasgow, you very quickly, particularly, I suppose, folks like us that are on the material side of things, realize that there's huge knock-on effects, and you begin to wonder, well, are people really thinking, where some of the stuff is going to come from? So I think it's fascinating. John and Jamie, anything to add to that?
No, that was a good answer. I'm good.
Yeah, I think that covered it pretty well.
Yeah, Nate.
Okay, very good. Well, Jamie, I have a question for you. Again, it's keeping on this sort of theme of transition and whatnot. Energy transition and a greener future means different things to different people, and certainly I think a lot of people, when they hear about the green future, they hear about an energy transition, they think about a move away from internal combustion engines towards electric vehicles. And when you think of PGMs, which your deposit obviously has a huge PGM component to it, you think about traditionally, obviously you have some jewelry, which is important, but a huge amount of demand in the PGM complex goes into catalytic converters in your automobile. And so as we move forward, maybe people might be a little bit concerned, but at the same time, a bigger picture, there's a lot of different elements to energy transition, and there's a lot of new sort of green technologies. So what role do PGMs play here going forward?
Okay, I think I heard a question in there, but I got it. The transition right now, I mean, PGMs are green metal. I guess they are using to clean the air. They are using to prevent or convert the carbon monoxide to carbon dioxide or to a water vapor. So they are cleaning the air. Biden has said he's going to increase make sure the states increase their loadings to what the California standard is. China's going to start increasing their PGM loadings. I think it's China 6, Europe 5. I could have the numbers wrong, but they're all going to make sure that the OEM manufacturers increase the loadings to reduce the carbon dioxide in the environment. But I believe the transition to full electric cars or full fuel cell technology will happen. It's just going to take a little bit more time than I think what people are anticipating. I think the chip shortage is a good indication of some supply chain stuff. There is, as you mentioned earlier, and I think Patrick and John certainly talked about it, there is a material constraint right now. I mean, there's just not enough copper right now to supply what people are anticipating for full electric cars or solar or whatever they want to go on. So I think, and then the other concern that I have is that a lot of the grid powers right now, which is why a lot of these uranium stocks are going crazy right now, is because all these grid powers are coal or natural gas. They're going to have to switch over to some sort of carbon friendly grid. And so just to have electric car where you're charging with coal doesn't really make much sense. It's borrowing money from one credit card to pay another credit card bill. It doesn't really make too much sense in my mind here. So it's going to take a little bit of time to do a full transition. I read somewhere the other day that Norilsk thinks, and I mean, they are biased kind of like myself as being a PGM producer, but they do have a bunch of nickel out there, that they think that the transition will be from hybrid cars. I believe in that as well. I think it's a natural transition. I don't have an electric car. I would like to get one, but I do have a little bit of range anxiety, so I don't think I'm going to get one. But I would, if I could make some money here, I'd probably get a hybrid car, a plug-in hybrid car, because I feel like I'm being environmentally friendly, but at the same point in time, I don't have to worry about stopping on the highway and waiting for an hour to get the charging spot on there. So I think the transition will be to a hybrid car. And I think as most of the people in the audience here realize that the hybrid cars need a little bit more palladium or PGMs or platinum than does a regular internal combustion engine. That's just because of the on and off of the engine of the electric. So I think it's going to be the transition there. I mean, I'm hopeful that we go electric anytime soon, and we, Generation Mining has a lot of copper there. So I think it's a win-win on either situation for us. So I'm quite happy with it. But I think, again, that I'm biased, but I think the transition will be from hybrids in the short term. Sorry for the long answer.
No, that's very interesting.
Good answer.
It is funny. Everyone sort of forgets about hybrids, but hybrids are a wonderful technology. And in a lot of ways, I think, at least in the short term, definitely a way to be able to make a huge impact here that people sort of, forgotten about, but very, very critical technology. And like you said, good for PGMs.
Well, hybrids are also good for copper. I bought a hybrid just earlier this year. I have a Toyota RAV4 hybrid. And if you try to avoid being a lead foot, you can run a good chunk of it off the battery. So and I'm like you, Jamie. I do have range anxiety because I'm an ex-geologist, so I like being outside still and being out in the woods of BC. And I'm a little bit angry. I wouldn't want to do that with a Tesla, but the hybrids definitely, they also take up a lot of copper and obviously the platinum group metals.
Excellent. John, would you take your Tesla out into the field in Argentina and Peru?
Not in Argentina and Peru, no, but cross country in the U.S., sure. So
very good. So, John, I have a question for you and for your project down in Argentina. You have a large project, both in terms of volumes and in terms of sort of potential. And I remember in the last cycle we saw more large potential projects in the hands of juniors, but obviously in the last decade, with capital constraints being what they are, we've seen it less and less. So can you just talk a little bit about some of the challenges and opportunities you have about moving forward with such a large project in a junior company? And ultimately, as it relates to that, is this something you intend to develop? Is it something you're going to tend to partner with? How do you think about having such a big sort of tiger by the tail here?
Yeah, well, our strategy that is basically to take a project like this and advance it through about a pre-feasibility stage and de-risk it during that period of time. So it's not just about finding a lot of copper gold in this case on the project, but it's also about showing that it can be developed and move forward. Basically making it attractive for a larger company to acquire it and put it into production. We're pretty open that that's our strategy. It's both in terms of our skill set, but also a frame for our investors. It takes a long time to go from discovery through drill out all the way to production. And as a single asset company, that gap between when you have your resource defined and when you put it into production can be a little bit like Death Valley sometimes, particularly if metal prices go sideways. So we've had good success with our first company, Antares, on drilling a project out and monetizing it by selling it to First Quantum. We're well on our way with our second company with Regulus with the Antiquary project in northern Peru. And the third company here, we're trying to repeat the success. And in this case, it's a little bit different because we acquired a project that had a lot of previous work on it. And so we benefit from over 100,000 meters of previous drilling that's been completed on the project. So that helps us a little bit on the cost. But we think they only discovered 2 of what we anticipate several more zones in the area, and they may not have discovered the best parts. So you're right, it will require quite a bit of capital for us to move forward. And that's where we're very fortunate to have large backers like Group 1, our principal shareholder, and Sibanye-Stillwater is very keen on moving the project forward. So we have good solid backers to move the project forward on this, plus the track record and the experience of having drilled these out previously and moving them along. So it's maybe a little bit daunting to be on such a big project as a smaller company. But I think now, the last 2 years, a lot of what our work was to put together all the fundamental data sets, really understand the district and see remaining potential on it. And we're just now bringing this one back to life. So it's a great time to take a look at an opportunity like this. Our market cap is relatively low, particularly compared to the amount of resource that we have right now. So I think you'll see this product come to the forefront in the coming years, people for these type of opportunities.
Fascinating, interesting. I mean, it's just incredible how this cycle has gone and how long that bear market really was. But now it does seem as though things are beginning to open back up and come alive, certainly. And I think we're entering into this new phase here where hopefully we'll begin to see some of the majors realize that they have large holes in their portfolio going forward. So I think it's a very, very interesting time, certainly. Excellent. Well, turning to all three of you now, it's interesting to have three people on a panel, all with potentially world-class deposits and projects here, and all three in completely different jurisdictions. I guess there are more than three jurisdictions, but usually in a panel you end up with two or maybe even everyone in the same area. Here we have three people with completely different jurisdictions. Maybe just go around the three of you. We can start with Jamie, but just talk about some of the pros and cons of working where it is that you're working, and how important do you think jurisdiction is here?
Well, I think Ontario is obviously one of the better mining jurisdictions in Canada, and Canada being, I think, a tier 1 mining jurisdiction is great for the project. Happy with it. Going back to it, sorry, John, just to mention, Sibani is our partner as well, and the previous operator was Stillwater. They had taken it to a certain level within the EA process, so they had met sufficiency before, so we're going through that same process again. So we're hopeful that we will get our EA, we will get our permits through Canada. We're not too worried about that. It's just a question of timing. So for us being in a country like Canada where they're quite transparent, we do have political support out there for it, as I think Patrick was mentioning earlier. This is a critical metal. Canada and Ontario both have put PGMs on the critical metal list, so that can't help with the permitting, but that could certainly help with the political support by the politicians to get this project moved ahead. We are getting support from the town of Marathon. We're getting support from the Ontario side. Rickford and Premier Ford are very pro mining. I think they were just up at Hard Rock previously, and they were before that at Cote Lake at the opening there. So being in Ontario, pro-conservative government or pro-mining government in the conservative is definitely helpful. And just one more thing, just to go back to our infrastructure that's around our property, having the two power lines, the rail and the road, is very good for us. So very happy with where we are in Marathon, Ontario, Canada.
Patrick, how important is it to you to be stateside these days?
Yeah, I mean, the United States can be challenging. There's, the permitting process. In our case, for the mine, we're expected to take 24 to 30 months. But the good news is there's a very specific process, and it's very prescriptive. And so, you got to go through that. The good news is, the thing is, the United States has got a stable government and legal system, so that whatever agreements and contracts you have are enforced. And again, we have tremendous support from the state of Alaska. Again, they want to diversify the economy, specifically a group called ADA, the Alaska Industrial Development Export Authority, which is an infrastructure bank owned by the state of Alaska, and their mandates to build infrastructure to develop the economy. And as I said before, the reason this area has never been developed is because it's in the middle of nowhere. The economics has never been the issue. We got 4% copper equivalent. This thing our projects would make money at $2 copper, but the issue has always been infrastructure, and there's tremendous support from the state to put this road in, and that's what we're dealing with right now. So, but in the end, you can work there, but you got to have partnerships. You got to have partnerships. The native groups, they're a big, NANA, as I said before, is a big partner. And the state of Alaska, and then having the support from South too, and showing the state, showing the local peoples that there's big benefits for them. And the good thing is, we're near the Red Dog mine, which has been operating for 30 years, and they've been a very, very good corporate citizen. 50% of their employees are Indigenous. And NANA's made billions of dollars, and the Native Alaskans have made billions of dollars from that operation. So there's already been a very good case of how mining benefits the state and the local peoples.
Interesting. John, different take. How are things operating in South America these days? Obviously, we hear lots in Chile and Peru. Happy to hear your take really across the board, not only in Argentina where your project is, but obviously you have a deep knowledge base across the region.
Yeah, it's interesting. I mean, I've worked in South America for almost 30 years now, and we all fled to Peru and Chile early on because of the large known endowment and the fact that they were major mining countries. They're still good countries to find things in, but it's becoming harder to find things there. And both of them are going through a bit of a transition right now politically to at least probably higher taxes on mining and more restrictions on it. And now what we're seeing is a lot of companies are kind of moving to additional countries in the Andes like Ecuador and Argentina that traditionally have been a little bit harder to explore and are less known as mining countries, but they're embracing mining. They see the potential for mining. So we're finding that it's easier to identify projects in those countries, and their legislation is evolving and to move forward. A country like Argentina, it's interesting because it's one of the few South American countries that's a federation of states. So each province has a different approach to mining on it. It's a little bit like the US in that sense, in that there could be states or provinces that are very pro-mining and others that aren't. So it's important to know where you're at. In San Juan, we kind of joke that the provinces that begin with the letter S tend to be a little bit better to be working in. So I think you will see the province of San Juan, where the Altar project is located, emerging as a very significant mining center over the course of the next decade or so. They have some tremendous opportunities. As I pointed out, there are 5 large copper gold systems queued up for development there right now. So this is a great opportunity for them to make transition.
Very, very interesting. Like I said, rare to be able to get three people, all with 3 completely different jurisdictions, together in one room. I guess that's the benefit of Zoom and internet and things of that nature. So, a lot's changed here in a hurry from a copper price perspective. And like I said, we've been talking about at our firm that copper is a green metal for 5 or 6 years, but really it's been in the last kind of 2 years that investors have woken up to this. And when I look across the natural resource subsectors, there really hasn't been a lot of money put to work, even in gold, and certainly not in oil and gas, but copper has seen some money be put to work. How have you had your conversations with investors change? Have you started to see the generalist investor begin to become interested here? And what's your feeling, broadly speaking, as to how far that trend can go? Because the base metals, copper, PGMs, these are not huge sectors. How much capital ultimately do you think is coming into the sector, and what's it going to do for pricing here?
I can speak a little bit to that. We've noticed in the last 2 years or so that there's been quite a bit of pickup of interest in the U.S., for example. And for that reason, both of our active companies are listed in the U.S. now as well. And we're starting to, particularly with the realization that we need to move away from a fossil fuel-based economy and be less carbon consumptive and move to more electric vehicles and other uses like that. They're starting to see it become more acceptable in a world that's more critical of mining and extractive industries like this. So we're seeing not only increased interest from the U.S., but we're also seeing increased interest from younger investors, and it's viewed as, particularly copper is viewed as kind of a green sector with what overall is a mining industry, which may not be that popular for younger investors. So we're seeing a bit of interest in it that way, and there's a tremendous opportunity for us as mining companies to take advantage of it. But we have to do our work carefully, and we'll do it responsibly in that context. So.
Yeah, Jamie, Patrick, anything to add?
Yeah, what I've seen is, we've been attending a lot of conferences lately, and we're seeing a lot more ESG funds and green metal funds or renewable energy funds. And a lot of these renewable energy funds, they can span the entire chain from, electric car manufacturers to, renewable energy companies, and all the way down to copper producers and developers. And so we've been meeting a lot of people I never met before who, in the past were generalists or in other sectors. And the nice thing about being a copper company, we're wearing the white hat now, because as you're well aware, copper mining sometimes often has a negative connotation, but it's nice to have the white hat and be part of the solution to help our planet and save our planet. And we're definitely seeing a different type of investor come into the base metal sector.
Well, I remember 2 or 3 years ago at the BMO conference, Robert Friedland got up and said he just started a film production company. He said he was going to make a movie about mining on Mars, and how ultimately, it was the miners that give us the world we have, that we know and love, and they were going to be the heroes of the story and not the villains. And everyone laughed in the room, but maybe you can star in it, because it does seem to be that's the way sentiment is now going, which would have been unthinkable a few years ago. But there's been this such a disconnect between how do we get what we need, and then who's going to give it to us. So Jamie, anything to add there?
Just a quick question, Adam. Was that the same time that Friedland was going the panel against Lassonde? Was that the same one?
I think it probably was. Yeah.
It was copper versus gold. It was pretty interesting.
Oh yeah. I saw that.
It was pretty good because Friedland definitely beat Pierre on that one, and I don't think Pierre liked to lose too much.
I wouldn't want to take on Robert.
Yeah, no, Robert's pretty good.
I'm much more comfortable moderating this panel than I would be moderating the panel. So,
the only thing I would add on it, I mean, we haven't seen much of it in the space right now, but other than, as Patrick was talking about, some of the ESG funds and the green metal funds, I think that some of the precious metal companies are going to look to green up, because that's not going to be a critical metal whatsoever. So if they're looking to get into this sort of green revolution, if we want to call it, they're going to have to start looking at getting into some base metals, some critical metals, some hopefully copper for one of us in the panel here. I know John was mentioning it earlier, but it would always be nice to get them as an investor or a potential strategic partner, or basically an acquirer later on once we get full value. Because looking at all of our share prices, I believe we're all undervalued relative to our precious metal group. So their currencies are much higher for whatever reason. So I think once we all de-risk our projects, I think they'll probably look to come around and try to green themselves up. So
interesting. I haven't thought about that. You're probably right.
Well, it's also a question of scale for them too, because particularly the large gold companies right now, it's hard to continue to grow a gold company on 3 to 5 million ounce gold deposits that have a relatively short life. And so we've noticed in the space we work in copper, they become very interested in large port systems, particularly if they have a little bit of precious metal for them. So every gold company out there is actively looking for large copper opportunities as well.
Interesting. Yep. Jamie, I have a question that's coming in here now from the Q&A box. I'll put it to you, but also happy to hear from Patrick and John. And it's a little bit specific, but it has to do with batteries, which is an interesting topic in and of itself, and electric vehicle batteries in particular, which has to deal with issues of weight as well as power. And in particular, there's been some discussion that potentially you could add palladium to the battery's chemistry in order to help longevity. And for the benefit of listeners, lithium-ion batteries are extremely expensive. They're extremely energy intensive to produce, and they have a finite life. And if you debate that, just ask yourself, how long does your iPhone last before you have to get a new one? And it's because the battery begins to wear out. So anything you can do to longevity is incredibly important. Jamie, are you following those trends and those discussions at all?
I've heard about it. I mean, I'm not an expert on it, so I don't want to talk about it. I mean, it would be nice, but palladium is a little bit of an expensive metal, so I would hope that they could maybe use it as a cathode, but it might make the batteries a little bit more money. So I don't want to lie and say it's going to happen, because I think it would make the battery more expensive. But if it does, make the battery last longer, then it possibly, or less nickel or less cobalt. But again, I'm not an expert on that, so I can't really talk about it. It would be good. I know there was I got an investor call the other day that Tesla has a project called Project Palladium, Again, I have no idea what that all means, but it's probably nothing to do with palladium. But it would be nice if they had it. I can't speak much about it. So,
John, Patrick, anything a little out of your wheelhouses both, but maybe not. Anything to add to that?
I just know we need a lot more palladium.
Well, it's funny. We have a very good relationship with a battery scientist at MIT, and he was pushing his students to try to find cost reduction techniques to produce batteries. And one of his students came and said, well, I think if you dip the whole thing in gold, it ends up being a lot more efficient. I think you're going in the wrong direction here. So I think there is a tendency to try to do that. You can maybe eke out more performance, but is it really worthwhile to anybody? I have a question for all three of you. Given a little bit of a change in the capital markets and given a little bit of uptick, at least at the early stages, and most importantly, given the fact that it's been such a brutal bear market for so long, are you guys seeing shortages anywhere, whether it be in employees, personnel, lab turnaround times, assays, things of that nature? Anything you have to do to change from a global supply chain perspective as you move forward here, or is that not really hitting you guys too hard?
Who wants to start?
Patrick, why don't you start?
Yeah, I mean, it's funny. Absolutely, and it, as you're well aware, there's a shortage of labor in general. We did a drilling program this summer, and just electricians, mechanics, drillers was really difficult. We had 3 drills turning, but we only keep 2 drills turning because we couldn't staff the third drill. Just trying to go out for dinner in Anchorage was a nightmare because half the restaurants are closed because there's no workers and no people to work in there. So we had to work really hard to get our camp staffed up. We got the drilling done, but yeah, absolutely. And the other thing I would note, I've always said, again, I mentioned I was a geologist in my former life. We just went through, for an 8-year period where mining was really in trouble. And so what does that do? Well, it results in less people doing mining engineering degrees, doing geology degrees, that sort of thing. And now this always seems to happen. And then when it turns hard. And then we're an acute shortage of skilled people. And so that's the other thing we're to contend with is attracting talent and attracting talent that knows how to build mines. And that's what we're going to be dealing with. So yeah, there's lots of capital out there, but we need skilled labor, and it's going to be very, very competitive, and that's what we're dealing with now.
Interesting. John, anything to add?
Well, just as everyone's been struggling a little bit on how we keep our people safe and how we move forward, we got to keep the pace right, and it's not just our own teams, it's communities working that we make sure that they're comfortable with how we're working moving forward. But having said that, people want their economies to move and they want employment opportunities too. So we're largely through that. It's been a hard for us to travel to Argentina. The borders have been closed, but we're fortunate that we have a great team on the ground, and so we're able to operate, and now we're able to get back in ourselves, which is helpful on that. So, but we are experiencing extreme shortage of rigs in some places, particularly Argentina right now. There's such a boom in exploration in San Juan, the province that we're in right now, that securing rigs is high priority for us. We're fortunate that we have 4 for this field season, but we've had to be really heads up to be able to get. There's quite a boom of exploration activity happening in San Juan province right now. So it does put restrictions on supply chains, and fundamentally we have to make sure we keep people safe. So that means we have to sometimes go a little slower than we'd like to, but we're largely overcoming that. It's the uptake in seeking out vaccines and getting vaccinated is pretty good in most of South America. So I think we're through the worst of it now.
Interesting. Jamie, anything final words on that topic?
No, I think John added the COVID angle. That certainly slowed things down a little bit here, but I think the labs are picking up. Obviously, they were a little bit delayed with the lack of workforce, and there's a few companies in Ontario that had a bunch of drillers out there that I think they're starting to wind down some of their drill rigs. So I think that will give some ample supply for some other people. But there was a little bit of supply shortage of drillers, and the assays were taking a little bit longer. But I think a lot of that had to do with COVID. I know you being American right now, or still Canadian, but you guys don't really have COVID down there. But still, Canada, we take COVID seriously, and we take COVID seriously up at our mine site for our site visits for our employees. We make sure that everyone's doing their testing appropriately or vaccinated as much as we can do. So we try to protect our people, which is obviously important for us. So again, hopefully that's coming to an end, and we can get some assays. The labs will free up a little bit.
Interesting. So no truck tire shortages just yet. That's later in the cycle. That's what I remember from last time. Nobody had truck tires. So Jamie, a question that's coming in on the Q&A here. As far as any financing deal the generation is able to move forward with, the question here is that it has to have approval by Sibanye. What impact do you think that's going to have from your timeline perspective? Does that make things more challenging, or how do you think about that?
I think the question isn't really a fair question. We don't need approval from Sibanye. We are the operator of the project. Sibanye is a minority partner. We're working on dealing with stuff like that. I can't really share it in this forum right now, but I don't think it's going to alter any sort of financing that we need to do in the future.
Okay, good. Well, thanks for clearing that up. Now, John, along with also coming in from the Q&A panel, I'm going to combine two questions here so that they're a little bit different. But one basically just talks about the difficulties of operating in Argentina, how even after, granted in San Jorge province, this is the question comes from, but even after approvals and money being put in the ground and actual drill activity happening, right when you would think that the government was on side, the government rejected approval on a project from one of our listeners today. He's saying, how much has things changed in Argentina? And I granted province by province, but how much support do you feel that you're getting today, and are some of those ghosts of the past still ever present?
It's a great question, and it brings out the importance of knowing which province you're in. As I mentioned, there's certain provinces that certainly embrace mining, and San Juan, where we're at, does, as evidenced by Barrick's large operation there, and several other decent-sized mines in the province. And certainly they're encouraging to move forward. They're providing tax incentives for some of the Lundin companies to put in infrastructure to their projects up north. We're seeing up in San Juan province, where we also have, or up in Salta province, where we also have some projects in the north. The lithium mines are coming into production very quickly. They have the advantage of they're much quicker to come into production than we are as copper mines, and the benefits are becoming very obvious. So for those provinces that embrace mining, it's becoming much easier for us to move forward than it has in the past. And every mine that comes in, whether it's lithium or copper or gold, paves the way for other ones to come in as well. There will be provinces such as Mendoza, where the project you're mentioning is in, that was a bit more difficult to bring into production. That province has chosen to do otherwise. Very similar to, say, Canada or the US. There are areas that embrace mining and there are areas that aren't. Similarly, you can look at, would you prefer to be in Argentina or would you prefer to be in Peru? I would absolutely, from some of my earlier statements, I'd absolutely prefer to be in Peru because it's a much more advanced mining country. The pathway is more paved for us. It's just harder to find a project. But if you've got a good project in Peru, that's a fantastic place to be as well. So it's very much dependent on which province you're in or which country you're in, and then balancing the exploration history. So the reason we like Argentina is because it's easier to find projects and source those projects than Peru, but it's not necessarily easier to put them in production. But it's very important which province you're in.
No, I think that's very helpful, and it's important for people to understand that Argentina, like you said, is really made up of very, very autonomous different mining provinces. So now, gentlemen, with the time we have left, I think we have a minute here, but maybe they'll let us go a minute more. Would you any sort of closing remarks? We'll start with Patrick. Anything you'd like to sort of close on today?
Yeah, I mean, I think John hit it, bang on. Where in Alaska, even, it depends where you are if you want to develop a project. And we're in an area of Alaska, where there's a rich mining history. because of the Red Dog mine, and we're working with a native corporation called Nana, which is knows mining very, very well. So it again depends where you are in a country. So but that being said, I'm very, very excited for the future. I'm very curious to see where copper is in the next 4 or 5 years, and where we are as a global economy next 4 or 5 years, as we move away from fossil fuels. And I think let me put it this way: we haven't talked about the supply side, and I won't try to take too much time, but as John and Jamie be aware, Codelco needs to spend $50 billion just to maintain the current production, and that's 10% of global supply. And I see BHP has to spend another 15 billion just to maintain their production. So yeah, I mean, even if we don't hit all the goals for the uptake of renewable energy, electric vehicles, I think the big push is going to be supply side disruptions, because these projects are multi-billion-dollar projects, and it takes a while to build them.
Yep, I agree, Patrick. I think supply is going to be critical. Jamie, anything to close on?
No, I just want to thank you for good job moderating. Thank you, Six, and please, for the listeners, viewers, audience, please have a look at Generation Mining and Trilogy and Aldebaran as well. I think they're all three of them are good companies that you should keep an eye on. So we all have good metals.
Thank you for that. And yeah, I agree. For those that are listening in, there will be a replay available. It'll be put online within the next few days. So please reach out to Six for that. John, last word is yours.
Yeah, I'd like to put some of the same comments from everybody else. It's a great time to be taking a look at copper overall. And projects can be at a variety of different stages. One of the things I point out on our project is that we're really a project that's a large project already from the work that's been done by previous operators, but it's been one that's been off the map a little bit, and we've put a lot of work in to go again. A great time to take a look at it valuation wise, in terms of not quite being back, everybody being aware of it right now. So it's not just project quality, it's also the timing when you enter into a project right now. So I think it's well worth taking a look at this, as we're about to launch a much more massive project with a lot more news flow coming out over the next year. So
excellent. Well, it's exciting times. Thank you for all of our panelists, Jamie, Patrick, and John. Really appreciate everyone's time today. Thank you all for listening in. And like I said, there will be a replay available within a few days on 6.com. Thank you so much.
Thank you.
thanks, Adam.
Thanks, Adam.
Thank you.